this is Martin here, coming to you for another episode of the Closing Bell for week ending 28th of June 2013. Early on, we did ask the audience who is listening to this premium section of the Friday Closing Bell, why is the market up today? And well, some people say it's China printing money, but like today is the 28th of June, which signifies the end of the first half of 2013. Of course, technically it's 30th of June, but that's a public holiday. So that's what today is the last day, and they are pushing up the market as high as possible for the nice closing there. So that's why we're seeing the market it's up today. Now, if you compare to last week, where we were. Let me just bring this up again. This is a weekly chart. You can see last week, it's still holding up 1750. Market did close up. Now, a lot of this is also due to the support level that institutional are holding up. As I said before, due to the window dressing, we have three bars already. So, and we have the resistance here, 1780, 1790. So that's a level you wanted to be, sort of thinking to go short. Now, what we have so far, like it or not, we have lower lows. Okay, higher lows. The higher is getting lower. Now it has to take up. Now next week, if we do see some sort of an uptrust here, right, market might just roll down. That's my biggest concern in here, rolling down, possible going forward now. So this is a 64,000 ringgit question. Will it go through a sell-off on the first week, the second week, or will it continue to go higher? That's a good question too. Now, on the FBM 70, which is the broader market expect, it has sort of, pull out or stick its head out from a downtrend in here. So temporary short-term trend has turned sideways. Okay, if you extend this channel here lower, you could see it's popping head out, but you still have the resistance in here. So 14,100. I'll be a bit careful going to it because it still point to the downside. Okay, on the foreign fund side, let me just bring up the foreign funds for you. I typically have it here, right? Okay, if you look at the foreign funds since the last high that we have, which is, I believe, here 30th of May. Am I correct? Okay. Okay, yeah. Yep, 29, 30th of May. You would see this tapering off. So since the beginning of June until now, we have 1 month of foreign funds leaving this region, and also you heard that the Prime Minister brother Nazir already said foreign funds are leaving the market, so hot money is going up. So that's why the market is tapering off. But local institutional RPNB and your EPF money are coming to support the market. And the last 2 days, for the first time, you see positive buying by the foreign fund, 39 and 112. If you take up the sum of this selling, which is close to about 4.4 billion foreign funds have left the market. 4.4 billion, right? That's a fair bit. Which is local institution had decided to go in and hold up and buy. So that's the story in here. You could see as long as we don't have too much of an outflow in here. Yes, this amount could be just hot money leaving, but market is holding up in here. And should the foreign funds come back in again to push it higher, they are bullish for long term. Trust me, for Malaysia, they're just not going to be here in the short term. In the shorter terms, there are some liquidity sort of redemption by the foreign funds or unit trusts on this market. And also, if you check the insider report posts as well as a GAB Guinness Anchor, there are some selling off. For that matter, that explains why GAP went through it lower. And also, analysts from CIMB gave a sort of higher, sort of too expensive. The valuation for GAB has been too expensive, limited growth, and they ask you to switch to another beverage company for that. So that has given why GAP has gone through a bit selling off too, right? So we done the foreign funds. We look at it now. If you look in the broader market sense, last week we were at 1755, which is here 1750. Let me just bring this up. 1755. Now it's 1776. Okay. So turning our market to regional here. Just a quick one on Singapore side in here. What I like about Singapore, we were talking last week that the market was very close to the tail end of a selling, and we should have a reversal very soon for the regional market. And we're spot on. Why is that? Because we have this selling in here, market gaps up, close higher, right? And also we have an uptrust, an unconfirmed uptrust, which naturally should point to the selling, but we didn't have that. Instead, the market gaps up and try to push up higher. And significantly, it's still the same also for the Hang Seng market that you see later on. So that's pointing in more to the so-called bullish. Wow, look at it. Our market's trying to close 21 points, as we are saying now, which is, really points to a lot of window dressing. All right, 21 points. And if you look at the individual stocks that you have, I still believe, let me just look at this. Wow, Pet Gas has the best closing here. Okay, Hong Leong Bank, FGV, so KLK, BJ Toto, all these are pointing up very high. Let me just sort this out. Yep, that's it. All pointing up to the high side in here. All the banking stocks and some of the blue chip stocks are pointing up to the high side, right? So now we're gonna next thing gonna look at before we talk about it is the regional market. Let's look at wicks. Okay, now wicks, fair enough. Most of you will have known I've been explaining this since for the last many times. Wicks is a measurement of fear and greed. Fear and greed. It does look at the S&P 500 of the ratio of put over calls. When the number is big, in this case around the 22 to 27, that means the market is very fearful. Last week we have a sell-off, which is very fearful, talking about the QE tapering off or the removal of QE in 2014. So that's why the numbers went shot up to about 22, 23. Now immediately that tells you there's a lot of